Those are really strong numbers. Do you see the growth continue into this year as well?
Sure. Thanks for having me. We sure do. We've had a terrific end of last year, and as we step into this year, tremendously strong results. Our year-to-date February numbers are up 16.5% on the sales side, which is very strong, and that's with China starting to move, but accelerating. And as we get into the end of Q1 and Q2, I expect China to continue to build. But our core markets around the world are continuing to deliver, everywhere we look, strong travel numbers.
So for China, when do you expect the full travel recovery to happen?
I think as we get to the end of Q2 and into Q3, we'll see it. We're seeing already domestic travel in China really approaching historic levels, so back to 19 levels in recent months. And international travel has a lot to go still, and our view is in every week China's releasing countries that people can travel to. Every week we're seeing positive news on that front. I would say by the time we get to end of Q2, international travel will show real promise for China as well.
Kyle, how are you weighing the prospects of recessionary conditions around major economies, and how do you expect that to impact, what has so far been a fairly resilient consumer?
Yeah, I think there's such pent-up demand for travel, and consumers are making decisions on how they deploy their dollars. And for sure, travel's been a winner all this past year. Our numbers every single month, every single quarter have been improving to the point that we're ahead of 2019 levels. And we're not seeing any slowdown in demand. I think the summer travel season will be very, very strong. I think recession and inflationary pressures are here, but as consumers weigh decisions, I think travel is going to be one that they'll continue to support.
Kyle, given the strength that you continue to cite, does that mean you'd consider raising prices?
I think we're done with that. We needed to raise prices through pandemic as there were lots of inflationary pressures, but some of that has settled off as shipping costs have adjusted and commodity prices have settled down. So I think for us, pricing is in the right place. As you and I have talked in the past, we're constantly creating new products, and what we're selling today, 40% of that is new and would have been engineered for what we're seeing in the marketplace. From a pricing and price positioning perspective, for us, it's going to be a demand-driven story. Pricing won't be the story for us at all this year.
And does that include input pricing as well? That seems to suggest that the inflationary pressures have largely eased.
I think there's always pockets of pressure, but I would say for us, we're seeing much of that behind us. The strength of the dollar is a benefit for us when it comes to sourcing, so that's helping us kind of maintain margins. Our gross margin story is tremendous. We put gross margins back to historic levels, and as our Asia business really catches up to the recovery, which we're seeing very rapidly right now, that will help our overall margin profile step up. Asia runs at a slightly higher margin because of the mix of channels that we operate. So I expect our gross margins to move up in this coming year, despite the inflationary pressures we're seeing. We've managed that really well over the last 18 months.
How busy is the production side at the moment?
Well, we got to jump on it. So we started to move, I would say, in the middle of last year to move inventory levels to where we want them. And we've come out of 2022 in exactly the right inventory positions. So we're really excited about where we are. We're continuing to bring in as volumes continue to grow. We had set a target ahead of our own expectations, which was exactly the right thing to do as we continue to overperform on travel. And so we're really in a terrific spot on the sourcing side. I was in Vietnam, Thailand visiting factories a few weeks ago. They are busy. We keep giving them orders, and they are keeping up. They're all properly staffed and ready to go. And we're really excited. I think it's one of our real advantages, our ability to leverage our balance sheet to put our sourcing and inventory in exactly the right place across the entire world.